Good morning, Europe. Good afternoon, Manila, and welcome to this webinar on the Philippine real estate sector, organized by the EU Philippines Business Network and the British Chamber of Commerce of the Philippines. My name is Joona Selin, and I will be your moderator for today's session. Philippine real estate sector, one of the booming industries in the country right now. And we will hear a quick overview of the economy and also of the sector itself, followed by a couple of testimonials from entrepreneurs from the industry. So before going to the bulk of the program, I would like to say a few words about the organizers, us as the EU Philippines Business Network. And so moving on to that, the EPBN, as we are called. Actually, before getting ahead of myself, the agenda for today. After my introduction, I'll be presenting our three speakers. After which we'll hear the presentations, and to wrap it up, we'll have a Q&A session wherein you'll have the chance to get the questions answered. Please type in your questions to the chat box during the presentation. So now then, going on to the to EPBN. So we are a EU co-founded partnership of 8 chambers of commerce and business organizations operating here in Manila. And what we do is that we promote increasing the exports and investments from all EU member states to the Philippines. And on the one hand, we do that through advocacy and market access, meaning making the ride smoother for EU companies to operate in the country. And on the other hand, we are engaged in what we call the EU outreach and business support services. And this webinar, of course, is part of that, talking about the opportunities in the Philippines, and then also being ready to handhold new companies to enter the market. The 8 partners that I was referring to are the Belgian, the British, the European, the French, German, Italian, Spanish, and the Nordic business councils and chambers of commerce here. And this webinar we are doing in cooperation specifically with the British Chamber. Introduce our first speaker. We have Sheila Lobien, the National Director and Head of Project Leasing from Jones Lang LaSalle. And Sheila will give us an overview of briefly of the Philippine economy, and then digging a bit deeper into the real estate sector. So please, Sheila, the stage is yours.
Thank you, Joona, for that introduction. I'll talk about the real estate market overview. Here are some key economic facts on the Philippines. When you talk about the Philippines, you will hear about the call center industry. The Philippines right now is the #1 call center industry in the world, and second to India in terms of the BPO industry. So what are the key economic facts about the Philippines? In terms of population, we have 100 million people now, and the labor force is around 41 million. The average age is around 22 years old. This is the people who will be employed by the call center industry and other businesses in the Philippines. In terms of literacy rate, we have 97.5%. Our GDP also is the highest compared to other Asian neighbors. Last 2013, it was recorded at 7.2%, highest in the region as of today. Here is the ease of doing business in the Philippines. Some scorecard for European companies and other companies who are abroad and who would like to enter the Philippine market. In terms of ease of doing business in 2014, so from 133, the rank, now it's 108, so there is an improved in terms of the ease of doing business. Of course, there are still a lot of ways for us to improve this ranking. However, the current administration has a very good perception, and you'll notice that the Philippines right now, we're able to get all the credit ratings from Moody's, S&P, Fitch, and that helped in the growing BPO and call center industry here in the Philippines. Here's okay, so it's really more fun in the Philippines. Some key takeaway here from this slide. A lot of call centers, a lot of companies are outsourcing their business in the Philippines primarily because of the Filipino people. So the Philippines has a lot of, almost everyone here speak English, and that is very important. The culture also is very adaptive to the American market. That's why big bulk of the outsourcing industry, bulk of the business is really coming from the US. And now we're seeing a lot of European companies entering the market as well as companies from Australia. And that's because they said the attrition rate in the Philippines is very low. And at the same time, the Filipinos are very easy to deal with. They're hardworking, and the cost of labor is still very attractive. A lot of these companies are coming in the Philippines because labor cost, they said, is just 25% compared to doing it elsewhere, say in the US or in Europe. So they save a lot in the labor and the employment cost of doing business in the Philippines. In terms of credit rating, you'll notice that the Philippines already have a positive and stable perception. We have Moody's, S&P, and Fitch, like what I've mentioned earlier. The real estate office market, very close to my heart. This is what we do every day. You'll notice that in 2014, the supply that entered the market is at 520,000 square meters of office space, or 5.2 million square feet. As of today, we've already seen 500,000 square meters of office space absorbed and taken in the market, and we still have about 3 months to go. If you look at the supply side, in 2014, what was supplied is around 600,000 square meters of office space, or 6 million square feet. In the market today, the increase in supply is about 30%. So we are, from now until end of the year, you'll see around 800,000 square meters of office space that will be supplied and that will enter the market. And as we speak, as of July 2015, 70% of the supply is already absorbed and taken. And that shows that a lot of companies are very confident about the market. They're taking space, they're signing, and the office space take-up is always a good indicator of the confidence of these corporations, of these multinational firms in the Philippine economy. Just to show you the current recorded demand versus the future supply. So if you're an occupier, big firms like Procter & Gamble, Unilever, Coca-Cola, all the big brands, and if you want to consolidate your space or move from one city to another, you have to plan a year or two in advance for these occupiers to be able to get the best location, the best spot at a very good term. You'll see that in 2016 alone, as we speak, 33% of the office supply in the market is already committed, meaning a lot of companies have already signed the contract, paid deposit for a building or for an office space that will be available next year. And again, this will tell you that there is confidence in the market, and these big companies are willing to sign and commit and pay for a space that they haven't even seen. Unlike 3 years ago, pre-commitments is not common, and a lot of big firms would usually plan like 3-6 months ahead, or they will still look at the building before they even sign and pay for anything. So what are the demand drivers? If you look at this pie chart, you will notice that bulk of the demand is really coming from the outsourcing industry. 70% of that is coming from the BPO call center industry, and then the rest would be divided into manufacturing, gaming, advertising industry. In terms of location, the benefactor of the demand in the office market are the Makati Business District, Fort Bonifacio, which is very near Makati, Ortigas, and the others are spread all over the other business districts. This is JLL top picks, the next wave cities. We've indicated more or less 10, 12 provincial areas, and this is because of the booming outsourcing and offshoring industry in the Philippines. The companies right now are moving towards cities or provinces wherein they can tap the labor market to save on the labor costs and at the same time be the first in each location. You'll notice that a lot of these companies are going to these locations to capture a cheaper labor market and at the same time be able to have a second site. So this is like their backup operation once they already have a big operation in the CBD or Metro Manila area. Going to the residential market, a lot of our clients are asking if there's a bubble or there's an overheat in the condominium market, and we say no because the biggest driver of the demand at the moment is the growing outsourcing industry, the overseas Filipino workers who are remitting millions or billions of peso every year, and the growing middle class. So bulk of these condominiums are targeting the mass market or the middle market, the people working in the call center industry. And these are the two main drivers of all these. The offshoring and outsourcing industry, which is last 2014 is already at 18 billion US dollar, and the OFW remittances is a 22 billion US dollar industry. These two pillars of the Philippine economy alone are able to sustain the growing real estate market in the Philippines. And we see no slowing down because there is demand. All the office space that is entering the market is being taken, and the condominiums that are entering the market also is being absorbed by the market. In terms of estimated average capital values, you'll notice that the price per square meter of the condominium units in the Fort or in the BGC area, which is a former military camp, is the highest at the moment because there are still a lot of land to develop. A lot of developers are putting their projects in the area. We already have 6-star hotels there, the likes of Shangri-La, Grand Hyatt, Ascot, and half of the city is still not developed. So they're able to command higher price per square meter because the projects are new and the projects are high-end. Unlike in Makati, wherein it is the first business district, but the rate is not that high compared to Fort Bonifacio because the land is limited and not so many projects are entering the market as we speak. And here's the residential market outlook. We say that there is a supply overhang, but in the short term, but as the market continue, we feel that all these supply will be absorbed and taken. And again, there's a stable OFW remittance, and the outsourcing and offshoring industry will continue to grow. The business process outsourcing industry have forecast that in 2016, the revenue that will come from the outsourcing industry will be more than the revenue that the overseas Filipino workers are bringing in the country. If we talk about the hospitality market or the hotel industry in the Philippines, again, because of the booming real estate industry, we have seen a big growth in the number of rooms that is entering the market. In 2015, we have recorded 4,000 units or 4,000 rooms alone. Bulk of the hotel that entered the market are located in Fort Bonifacio. So like what I mentioned earlier, you have Shangri-La, Grand Hyatt, and Ascot. And in the next 3 years, you'll notice that we have more than 10,000 units, hotel rooms that will enter the market. And this is because most of the supply are coming from the Bay Area, the casino area. Again, this is the tourism industry that the Philippines will still have to develop. In 2014, we got only 4 million, 4 million visitors in the country, and that's just half of 1% of the whole tourism visitors that Asia Pac have received. So there is a lot of room for us to grow in the tourism industry, and all we need in the Philippines right now is continued improvement in infrastructure, airports, roads, the traffic, etc. But it's always more fun in the Philippines because the companies, the big multinational firms are coming here because of the great talent, affordable labor, and the quality of Filipino workers that they get. And and there are a lot of big firms right now, the likes of JP Morgan, Deutsche Bank, Wells Fargo. All the big banks are already outsourcing their business in the Philippines, employing thousands of employees and helping the Philippine economy grow. Um, and this is just a slide showing what we've done in the Philippines. JLL is the largest real estate advisor in the Philippines. We've helped almost 70% of the building owners in the country in coming up with a project that will be absorbed by the market. And at the same time, we've also represented 60% of the outsourcing companies who are currently present in the Philippines. Thank you very much.
We have Mr. Carlo Cordaro, who is the owner of Atelier, a Cebu-based furniture manufacturing company. And Carlo will be talking about his experience of doing business in the Philippines. I'd like to turn it over to Carlo Cordaro in Cebu.
Thank you very much for the introduction. Good afternoon, everyone. The story of Cebu Phil Corporation, which is my company, and consequently Atelier, which is our Italian brand name, has been a good example, even though in a very small size, and also in the low tech, because now we making furniture I consider as a low tech things, considering that everything is oriented to electronics, communication, and other things. But let's say that thanks to the Philippine market, in our 30 years history, the company was established in 1985. So this year we are turning our 30 years. Thanks to the Philippine market, I was saying, the company was able to survive the 2008 complete change of the market perspective. Since we are based in the Mactan export processing zone, which is a free tax from duty and taxes on the importation, and there are several zones in the Philippines, and of course we have a certain quota only for the local market, and mostly has to be on the export market. But let's say after 2008, when there's been, as all of us knows, a total sort of financial meltdown all over the world, thanks to the Philippine market and our flexibility, we have been able to serve properly also this very effervescent and sparkling market. And I would say that thanks to the good fundamental of the Philippine market, the real estate, the hotel, and consequently residences has been and it is quite a solid market. Now, personally, I came into the Philippines, and my story is very small, as mentioned shortly in this presentation that is showing in the screen. I was a financial analyst, and I came here to just do a due diligence of this little veneering plant. But then I personally really thought that this country could have had a good future. I fall in love for the technique, the wood, and the human factor. That is a very, very important thing. And so I diversify completely the factory from just making merely sort of raw material, which was the veneer, into panels, interior, doors, and we go down the road and we integrated vertically to do complete turnkey projects for hotels and residences of restaurants or whatever kind of project is going on. Of course, we always kept our export market, which was an important driven force, but being in my previous life, let's say, an economist, for me, the market, $1 or 1 pesos, if it comes from Tokyo, from Manila, or from New York or Rome, it doesn't make any difference. So I always look at the local or domestic market in a very favorable way. And I think that when we look at the numbers, even though we are in a furniture sector, which is a very mature sector, so as I said, we are in a low tech, still there are several segments of the market that were not fulfilled. Now they are, because all the top brands, being in Italy, of course, an Italian, I observe the Italian company, how they moved. In the last few years, there is nothing that you have to look for. Everything, all the brands are in Manila, all the necessary top level interior fabrics, lamps, and whatever is already present in the market, even though there are several niches to be still filled. For example, I think that the Philippine market, it reminds me a bit like Dubai 15, 16 years ago, where everyone were building a house or buying an apartment, and then they go to IKEA. So I think that there is be a huge need, I'm speaking against my interest, but anyway, I'm not that large. There will be a very important market also for the furniture on the mid-low end, and not only looking at the top-end market. And so I think since as mentioned by my predecessor, there are the call center, there is the creation of a mid-class. I think that there is also a need for furniture, interior, and any other products that could be also related to the new yuppies, even though they don't have an income like in Western country, but every country, I think, has its own story, and the Philippines has its own growth. Definitely the income per head looks like low, but I would say that is too generic, because there are areas, rural areas in the Philippines where the income is extremely low, but the people still have a very comfortable life. In the cities, definitely is much different than the one that is reflected to the big numbers. So there is room for market, for importation, of course, because the peso is very strong. But also I think that as a manufacturer in the Philippines, I would say that it could be like to be a sort of Trojan horse, because nowadays, in any case, shipments, and despite the low cost of oil, still shipments are very expensive, and furniture, the transport of furniture is really, the cost factor is important, the transport cost is an important factor. And in any case, to be present in the market, it's very important, not only because you can reach any kind of niche depending by your flexibility, but also because it's not really the furniture commodities that easily you can order via email or via catalog. But there are other factors. So I recommend, against my interest, that in my opinion, despite the furniture industry, honestly speaking, has had a big decrease in terms of number of companies that are operating in the country after the 2008 crisis, in my opinion, reorganizing and looking at a certain sector, like I say, more on the low and mid end, there will be interesting volume of the market, because the top end market is, as usual, super crowded. But since this venue and this video conference has been organized to show and to promote how it's possible to do business in this country, I can be also a little example how a small and micro businessman like I was when I arrived here was able to survive and to overtook any kind of obstacle. Actually, I since it's already 20 years I'm living here. There has been also several turmoil of any kind, but mostly, if I draw a line, I would like to say that there are a couple of important things that make this possible, this investment also possible. One thing is the safety. Despite what CNN or whatever go into the news, personally, I've been here 20 years and cross finger, but I felt always very safe. I felt there was a good politicians, also very good, very well oriented in protecting, let's say, the exporters, the foreign companies, and every time there were a problem, they were very accommodating in a very, very professional way. So I feel this country, for me so far, has been safe. Another important things that you can count on, since I repeat, I was an economist before and still I like to observe these things, the currency. The Philippine pesos, funny to say, is one of the most stable and strong currency in the world from 2008 to now, but also if you analyze the path and the graphics of the last 20 years, is a stable currency. There has been some heavy fluctuation. $1 was buying 55 pesos 10 years ago, more or less, or 11, 12, I don't remember. And then it went down to 40 pesos per dollar, and now it averages 46, normally 45, 46, which is a sort of level that apparently the Banco Central Filipino decided is quite conservative to keep. And is a very well managed bank, the Banco Central Filipino, so the banking system is extremely solid as the fundamental of the economy. So going back to the smallest things of the business, I recommend, like you are seeing now in these little notes that are very basic, but it's very important to spend a little time in really researching, because it's the Philippine market is a bit erratic in this moment. If I have to do a comparison, it's like when there was boom maybe in the 60s or in the 50s. Prices are quite erratic on certain commodities, so you have really to study very well your segment of the market, because with the strength of the pesos, the possibility to produce here or to import, this is the big equation that you have always to analyze. Very, very important. Then I recommend, since for me has been a fantastic experience, to, of course, stay in this export zone, Philippine Economic Zone Authority is called, where there are the 5-year tax benefit, but this is, I think, for any exporter is allowed. And then there is also another tax system which is quite interesting, and is based in because the tax on corporate, like in the income tax in the Philippines, are not low compared to the neighborhood country. I mean, you have Singapore, you have Hong Kong, you have other countries nearby, but instead the Philippines is quite high. I don't want to go into the easy polemics, funny, nobody pay, blah, blah, blah. No, excuse me. But for example, for the export and then all the official established business, and I would say, allow me to say also that during this last administration of President Aquino, the BIR, which is the institution that controls the taxpayer, has been extremely professional, extremely cooperative, and extremely rigid also. So there has been also a change of mentality in the country, and I salute this in a positive way, because being also a CPA in the past, I always follow the rules, and so I didn't have any big problem. So what I was saying, there are important rules inside this export zone. For example, you can import and then re-export free of any duty, but the tax system is based on a flat rate of 5% on the gross income. And so it means that even though you are losing money, still you have to pay the 5% on the gross margin. And in some way, it looks a little bit friendly.
Unmuted.
And the gross margin, of course, is computed only by direct cost of production. You can deduct only the direct cost of production, which is labor, raw material, power, and a few other things, and from the revenue. And so it's quite, in terms of a final number, it's like you to pay a sort of 2%, 2.5% on the total revenue. So I think it's quite reasonable and easy to compute. There are not so many discussions. This is deductible, this is not deductible. Direct labor, direct cost of manufacturing deducted from the revenue, 5% on that. And this is, I think, is also an important incentive if you stay on those export zones. And also there is a certain high degree of protection, are all fenced, and the laborers are more, let's say, protected by the Department of Labor. But I think there is a sane environment. I hope I covered enough of my sector, let's say.
Okay, thank you. Thank you very much. Next presenter, who is Rick Atienza of iMic International Corporation. He's the founder of the company, and iMic, as it's called, is the exclusive distributor of Pisaza in the Philippines. So Rick will be talking from his perspective of representing a European brand in the Philippines, and where are the opportunities in his view. Rick.
Thank you, Sheila. Good morning, Europe. Good morning, everyone. Good afternoon here. I will present my company. iMic is the exclusive distributor of Pisaza in the Philippines. Pisaza is a global luxury brand from Italy. It's a glass mosaic tiles. And I used to be an employee of Pisaza as Asia Pacific controller for the first 3 years, and as a country manager and general manager for the next 7 years. But today, so basically, our team in the Philippines is the one that brought Pisaza in the Philippines. But today, after 3.5 years, I became the exclusive distributor of Pisaza in the Philippines. I will continue to expand in allied industry from fit-out, installation, construction, services, wherein we provide innovative quality materials, not only Pisaza, because as of now, for this year, we will soon be carrying Italian furniture brand Colombini Casa as the exclusive distributor in the Philippines also. And also we plan to expand into the export market for Pisaza affiliate in the ASEAN region for Pisaza hand cut and computer pattern, because as of now, we've been able to gain the craftsmanship of the hand cut pattern that used to be only done in Italy. First, we introduced Pisaza in the Philippines sometime in 1999. Basically, there was one Italian dealer who convinced the Pisaza management to set up an assembly company in the country so that it will become a hub in the ASEAN region because of its strategic location. The setup would able to take advantage of the cheap labor costs here in the Philippines, the lead time advantage for the other country, because we import the loose tile and then we do the assembly plant and distribute to the neighboring countries, and of course to have tax incentive, and of course to establish also Pisaza market for the Philippines. But in 2004, because of the opportunity in China, we transferred our assembly plant to China because to capitalize on the growing potential market there. And at the same time, to become the distribution point in the Far East. But at the time, being the Asia Pacific controller, I convinced the top management to continue operate the Visasa Philippines as an assembly company to serve primarily the local market with the inherent organizational and operational capabilities already we have. And of course, to add value support for our export sales in the Far East region, if Visasa China could not accommodate some of the Asian requirements. And as is it, we transferred from the export facility zone from Cavite and set up an assembly plant outside of the economic zone. And by the time we continued to increase our market in the Philippines. And but today, after so many years, they allowed us to become the exclusive distributor of Visasa, and 5 years from now, we have a lot of opportunities. Basically, because of the 10 billion casino projects that will continue to go on for the next 5 years, which started 5 years ago. And that projects will consist of 4 big casinos that is ongoing, and this has sparked tourism, which complement also a lot of five-star hotels being built around the area, and including the business process industry. And spark of casinos and entertainment development, coupled with construction of high-end condominium buildings and five-star hotel in the Philippines, has leveled up the design quality standard of both developers and customer, with international design consultant being given the power more than the contractor of the choice material to be used. Thus, high-end luxury and quality products from Europe are being accepted now in the market, just like our Visasa product. And that ends my presentation. Thank you.
Thank you, Rick. We had to cut short, unfortunately, your presentation a bit there. So at this point in time, we would like to entertain some questions and answers. So I understand we are running a bit short on time. So we'll go straight to it. Now, maybe as a quick catch up to Rick, to your presentation. You mentioned the opportunities for European brands to come in now, and there's more potential. And Sheila was talking about the numbers and so forth. So it all looks very attractive. Now where do you see the main challenges or obstacles coming into the market?
Well, of course, the main obstacle is just like the perception of doing business in the Philippines. But if you hire a trusted lawyer and a trusted accountant, and there are many credible auditing firm and law firm in the Philippines that they could consult to set up a business. But other than that, I think everything is fine, doing business here in the Philippines. Yeah.
And of course, finding a local partner, even as a distributor.
And I think I'm one evidence of that. An Italian company partner with a Filipino company, of course, because they trusted me, because I helped even in the setup of the China operations. And I came here in the Philippines, going back and increase their market share, not only for the Philippine market, or even the ASEAN region. Yeah.
Well, now we've heard the overview of the real estate sector and its opportunities. As an example of what we are doing next, I'd like to quickly mention WorldBex and the EU Pavilion that we are putting together at one of the largest building and construction expositions in Asia. So we are bringing European SMEs to participate in an EU Pavilion at WorldBex in March next year, and that will that's our way of also supporting and promoting new entrants to the market. So if you're interested in participating, please contact us directly. And that brings our webinar to an end. I'd like to thank our experts and speakers for their contributions and sharing their insights, and also all the participants for sharing your morning or afternoon with us. Thank you very much.